Okay, who's about? Uh, sorry, I'm just going to test. We're going to record this session through the YouTube channel. Just a bit of a rundown. So I'll see how that goes, see if I get myself organised good enough. And I've got a feeling, I think it's coming through okay. You seeing it okay, Jace? There's a chat in there. Sounding's good. Yep. Right, so just a bit late to the party at the moment. We've got the SPY just opened. The rough thing is at the moment, because of the time change, and I think it's going to change again. Oh, perfect. Because of the time change, we can't do it all in one hit. I mean, before the Nikkei and the Aussie was open at the same times, 9:45, 9:50. So we could have ran through that if I was quick enough. Now, what is it? 10:50. And I think that changes again. I'm not sure. I know Europe will change again another hour. So Europe at the moment was 4 o'clock, then 5, index open. Now 5 and 6, then it'll be 6 and 7. I think they'll change another hour as they move back or out of daylight savings or something. So I'm pretty sure. Don't quote me on that. So the SPY open, looking for that flush. I'm a bit of a skeptic at the moment. We'll look at the ASX chart in a second. I'm a bit of a skeptic when I see this massive bull run. I think everyone's just getting a bit more cautious. We've got these issues and they just keep piling up at the moment. So we've got a debt ceiling, which look, the debt ceiling is not a problem. You can imagine those. I think the pollies are just loving the limelight, to be honest. I mean, they love argy-bargy. Whoever's in power, the opposite side, their only job is to argue with everything. So, the Dems are in power. What do they call again? Democrats, Republicans just sit there and argue, and that's their to push it to the last minute before they actually come to an agreement, which I think is inevitable. They're going to raise the debt ceiling, and you look at the US last night. I mean, gap down in the open, and only gap down because of Europe getting pumped. Um, but they all know the debt ceiling is going to be raised. The more issue is now is when is the Fed going to taper? Now, inflation's a concern, but it's all the stuff that's sort of triggering inflation could be fixed. Um, supply chains, where I don't know how long they might take to get fixed, but supply chains are causing inflationary pressures, which is kind of an anomaly. Energy is an input is going to be for inflation. That's not whether that's going to persist or not. Who knows? You're reading more about it, and the news is going to love it. They're just moving from one story to another. They're going to be pumping the hell out of it, so it could make people nervous. Look at SPYs just ticking up now, looking okay. Yes, there's a few things stacking up. We've got payrolls on Friday, which is a big one, and there's a number that comes out. It's only relatively new, considering there's a number that comes out. When was it? Comes out now, Wednesday, last night. Yeah, last night, ADP. So it's kind of someone's put out a new number, and they've just decided to front run, trying to pick up some, what do you call it, some hits, I guess. Front run the big payroll number that they've been out of whack too much. The payrolls are more consistent and they're more to guess exact. So they're coming out Friday, but those numbers out the other night suggesting that the payrolls are going to be quite strong. Now, last few times they've suggested negative numbers, and the numbers have come out much better. So they're off the mark quite a bit. So I don't think people put too much emphasis on that, but they're still going to be watching those payrolls. Stronger payrolls, stronger employment points towards, a fuller capacity labour market in the US, which means tapering and down the track rate rises, which is going to really annoy bulls at the moment. But we'll see how that goes. I mean, it could be anything. They could take it either way. It just depends. I mean, the US just tends to be they chop and change. I mean, they could look at rising tapering and rising rate rises, a negative, and then they turn around and rally because they're looking, okay, the underlying economy is strong. So yeah, but everything is so overvalued. And once bonds, traditionally, the reason why everything's been going up is because there's nowhere to put your cash. It's just chuck it into shares. There's nothing into bonds. There's nothing anywhere. But now you're looking at rate rises. There could be some flow into bonds again as bonds start to factor in higher rate rise or higher interest rates. So it could knock them on the head a bit, and there might be some fear. I mean, you see what happened in New Zealand rate rise. Everyone sort of ran for cover a bit. Yesterday was at midday, which I like that jab. So, Jace, high five in the background. I hope he's doing okay. I haven't been on lately. I've been too busy trying to do some videos and bits and pieces. So, getting myself organised for the website. I still to give you a call, Jace. Sorry, mate. I'm a bit slack. Uh, well, so let's go through other markets now. The Dow, this Dow, that's just popping its head above that 34,490. It's been contained through there for a few sessions. I'll reckon that's going to extend into 34,650. May or may not. This is a massive support zone through 33. So the market's tipped over, tried to go lower, found that support, and now we're probably going to edge higher. At least if you look at that, I'm suggesting that probably pop up here. It's going to be about even to a move in or just through that 34,650, that volatility projection. So we'll see if it pauses here and backs off, or we just pump up to 35, above 3,500, which is a good little rally. But that's the Dow. It's looking, if we move all that, that's, to me, we're on a half an hour chart, looking a little bit more bullish. We could get this, bit of a grind home and get slammed down. You just don't know from day to day because the US, everyone is a bit tentative. Look at Europe. Talking of higher interest rates, the DAX is down 200 something points, got slammed. Um, and some of their numbers weren't too good, as in, what was it? They're more concerned about energy prices and inflation. But because New Zealand's raised rates and they're talking up more rate rises to come, everyone's going to be factoring in, it's going to be sort of extrapolating that towards other Feds. The US Fed, ECB, was it BOE, Bank of England, all potentially looking to raise rates because inflation could get out of hand. If they just let it, even if it is just because of energy and supply chain, we don't know how long this supply chain is going to last. So, got to be careful. So it'd be interesting to see how that plays out. I don't think the Fed cares. They go, no, we're going to stick to it as long as we're not at full capacity, we're not raising rates, and they'll keep that liquidity tap running. That's the Dow. I don't really look at the Dow, to be honest, too much, especially on intraday. Now the Hang Seng, bit of a mixed bag for me yesterday. Took that run down, like chunks out of it. I didn't expect it to get slammed on the open, but took some good chunks out of that, and then gave it back. And it's rubbish. This rubbish earlier. I was expecting. I was long short. Longs. I get squeezed out, and I was long on this little pop up here. Was up and then got slammed back down again, and just watched that evaporate and turn into got stopped out of that. So chopped around in this zone, which wasn't too pleasant. But yeah, the Hang Seng is more about those morning drives at the moment. You're getting those morning drives really, really doing well. And it's been the last few sessions. So all I'm really looking at on the Hang Seng is, let's just look at the index to start with. This is the Hang Seng index. Now, this is a 30-minute chart. That's weighted down, but it's been reacting up and off these zones a few times, and they will flush and then pop, flush and pop. You look at these. Let's just get some of this rubbish out. So I've got quite messy. That'll do. So you can see this flush down through support on the open, and it sort of popped back up, and then that led to another run higher. Did gap up here, but then it got weighted, retested that zone. So you still got the 200 MA heading south. It's still being pressured. This could all be a key lower high. What zone's that? 24.6, 24.7. A key lower high that's pressuring the market down. Now, if we get another lower high here, or are we going to do what we've done before, flush and then rally up? We flushed here, get a bit of a leg up. The thing is, it's getting through that. It's pushing through, but with lacking conviction. So it's really just searching for some liquidity at the moment. Um, yeah, I was dropping. That's what I do it now. Yeah, we'll have a look at the ASX in a moment. Um, yeah, it could turn into a lower high here because we've got, if you can see these minor levels, sort of lower highs here, lower highs. We flushed that yesterday and straight down. So that's once we popped up through there and come straight back down. That's what sort of triggered me into getting short because you can see the 5 minute on the CFD was just heading south. We've got, where's the action here? This here. So as soon as we're holding below those MAs, especially on the 5, I'm just looking at the 1 for some short opportunities. Some little minor lower highs, holding essentially. If it's going to be a good strong trend down, it's going to hold that 10 EMA. Now, when you start getting this sort of rubbish into a zone, I stupidly got caught there. I was just cocky. Um, After a couple of good shorts, I did have a bit of a loss. I was doing this breakout strategy thing that I'll show you down the track. Didn't trade it properly, and it actually worked. So I was behind the 8 ball there, but made it back plus some more on the way down. And then, like I said, just gave it back in this zone just by stupidity. So I was trading against my plan here. I was watching that into support, didn't bother stopping, was trying to just getting cocky, going, I'll go long, I'll nab a few points long, and that turned into a loss. Okay, it's going short again, that turned into a loss. So there's a few times there, a few stop outs there that really added up and just it turned into a pretty crappy day overall. So a bit disappointed with the trading yesterday. What was a good day turned into nothing. So we'll see what today brings. Yeah, so that's Hang Seng could be weighted here. I mean, they could just as easily slam up because that looks like it's heavy. It's just as likely to slam higher. On the 30 minute, you've got MAs. It's sort of what I like to see a lot on the MACD. Sorry, is this kind of thing. Pushes up to the 0 line and then it can get slammed down if it's positioned right on the actual index. Now this is good. Last time we slammed down from there, we sort of crept up to the MAs, bang, down on the open. We could have a bit of a flush high and then slam down. But it looks like that momentum, it's not really up. The price action sideways, but momentum down is easing. So generally, when it's sideways action, um, sideways price action, and the momentum is starting to ease, it's heads up for another move down. And now, if this move down, we could be heading straight down to 23 100 quite easily. And that's a good hefty drop. Now they've still got concerns about what is it, Evergrande? What are they called again? I always forget. The housing market in China. There could be problems there. It's going to be interesting to see whether the government ring fence that is Evergrande, and they let others fail, or what's going to happen there. Either way, I think they've got a few issues, and then they've got the energy crisis over there. So I think that could all weigh down on the Hang Seng. I wouldn't expect it to get out of hand on the upside. I'd expect it more to get out of hand on the downside than anything. But in the meantime, a lot of the time the Hang Seng's a tale of two sessions. From the first session and the second session, it could set up for the second session. So you expect to go down, and it keeps popping higher, it keeps getting supported. The algos are working it, and the next session they slam it down, or vice versa. So you just have to, I guess, be careful and trade the price action. Let's look at the ASX while we're here. What I wanted to take a look at, this is the issue for me. We've got some good support through here on the ASX. This is the 30-minute chart, don't forget. This is that 70. I was looking at, say, 72 originally, but it's been just sort of tipping into that 71.80, pressing in there. But either way, it's got some support there. If we go back to the daily, the longer term trend up is still intact for me. We've got, across the highs, that longer term channel. We've broken this zone, but we're sort of holding up. This is a previous highs before that meltdown, previous all-time highs, which we broke. What's that in June this year? Broke it up and through. Consolidated around there, extended up, got to the top end of that channel, come straight back down again. Whether or not we're gonna go down, if we do go down, I'm sort of still expecting that lower end of the channel to hold up. Whether let's just see whether it's here or it could be around here. But the longer it holds up here, say 71, it could just keep tipping through, and that's going to get the bears excited and then squeezing back out, pushing through, squeezing back out. The longer term MA is still up. The problem is this 200 is starting to potentially flatten out. Now, I would think that if it's going to be heavy, it may have gone by now. The MACD is showing that downward pressure potentially easing as well. So if it's all sort of matching up to a bit of confluence around that zone, we could have a bit of a pop. We'll see how that goes. But yeah, that's the daily chart. It keeps pushing into that zone, and it's rejecting it. But the problem is it's still holding lower highs. It's probably a bit better seeing that on the 30-minute chart. You've got these lower highs that are still in play. So you can't, be complacent thinking that zone's going to hold. It's going to hold once these break. Once these lower highs break. Once that breaks, that's going to bring into question this downtrend. So anyone that's been selling into that, into the lower highs, this pop up, selling, they're going to be caught on the wrong side. And you want them to get caught on the wrong side. At the moment, they're not. They're not caught on the wrong side. Just check out where the SPY is going. If you go and look at, just as a side note, just looking at the chat with the SPY, I'm a bit of a believer where it gets pumped up overnight, it produces a good open, and then they sell into it, and vice versa. If they want the ASX to go up, it's kind of like the overnight SPY is contained, is well contained. You can see it quite a few times when the Dow pops up and the SPY doesn't follow, and then you go, oh, what's going on? But it's just a kind of it mutes the open, so your funds and all that can get a better price on the open. They just sort of mute that SPY, contain that SPY into the open. But when they let the SPY get out of hand on the upside, and especially like this morning, it was around that zone 72.16, that that's going to get flushed. It's just whether or not we can continue up or whether we drop back down again. At the moment, it's looking like we could potentially, we could flush there, flush down, hold a lower high because the MA, the 200 is actually going up. All that does is, for lack of a better word, pisses people off. This kind of action, you don't want to see it drive down and then bounce and hold a lower high because that could take us down to 71.12. Maybe not today, but in the next couple of sessions. Let's get rid of that. It's annoying when it's there. So yeah, and you'll see it. Yeah, you'll see it on the SPY. If you go, I'm looking at the closes. So when I'm doing the morning report, I'm always looking at the closes, and the closes they tend to hover around the same area. It closes, it goes down. The next night it pumps back up to that level roughly. But so the overnight sort of close, it's not doing too much over the period of a couple of days, but it's just chopping people around. And that's why I'm not a massive fan of trading the SPY. I find it a bit harder than the other markets. I think that the Hang Seng, although the Hang Seng can tear you a new one sometimes, the Nikkei can turn around, do nothing, not trade, and then bang, off she goes 100 points out of the blue, and vice versa. Whereas at Hang Seng, you'll see it moving and you'll see it speed up. You'll see the actual movement, and that's the algos working it. But when they're working, they sort of leave a bit of clues with the depth. Not that I'm watching the depth, but you're watching the CFD price. When it comes down, they want to buy. It sort of speeds up into a little area, and it could chop around and then start to get supported again as they're constantly hitting it. Whereas the Nikkei can just sort of sit there. It can sit there, do this kind of thing. It'll be quiet, and then bang, it starts to take off if they slam into it. And the SPY, my problem with the SPY, it's a lot thinner. Even the futures markets, a lot thinner than other markets in the volume. So you can have these spikes down. You go, I want to buy it. I want to buy it. I'm waiting for my setup, and then just up she goes on the 1 minute chart. And I'm sitting there waiting for the higher low or something. And I'm not a big fan of that. I'm not a big fan of just, for instance, here, that would have been a good trade actually. That sort of thing where you think you want to be a buy, and you've got this RTF, we call it, retest fail, comes in here, fails, and starts heading back up again. You can buy the break up there. Sometimes you get these flushes. From here, I potentially was watching for a short, but not with the MAs. That sort of trying to follow those MAs, which is the important thing. I don't find as many nice setups, and what I used to do a lot when I was trading the SPY quite a bit is kick myself for missing that one or two good setups. Kick myself and then chase my tail. If you happen to get into it, that's great. You've got to make it pay. All right. What else we got? Hang Seng, we've had a bit of a chat about, haven't we? Uh, excellent connection. Everything's looking good. So we'll do more of these, I reckon. Only because I like talking. Yes, the Hang Seng. This is all CFD market. So the market closed at, is it 5? Let me just check that. It's not 5 now, is it? What a goose. 6, 5:30, 6 o'clock. What a knucklehead. So this line here should be here. Right, so that market with the futures is not the CFD pricing. With the futures is actually just popped up above these, previous highs in here and in here, popped up into the close. So we'll be watching for either this flush down and then rally up to 24,310, or it's going to come straight back down, potentially retest like this, straight down and retest from underneath, and then get sold off. You'd be looking for that on the 5 and the 1. Like I said, on the Hang Seng, it's about that morning drive lately. You get that if you can get on the board that morning drive, there's more than enough fat in it. Nikkei, I don't like the way it sort of popped its head above 27,655 and then went sideways. The index itself, where are we? Here we go. It's down on that support. I mean, look at that. We gradually move our way down. We break this downtrend. If you go and look at that on let's go look at it on a 4-hourly. Break that downtrend, slam up into these highs, take it out. So essentially, we've got a massive RTF on a daily, retest fail, double top, whatever you want to call it, because we come straight back down again. So the Nikkei's copped it. I don't know what ramped it up there. I think the change in president or prime minister, what they are in Japan, it's come slamming back down again. So the fact that it's in that support, we're going to keep an eye on to see whether it can actually hold or not. And it has a bit of a liquidity zone there. It's traded around there before, traded into it there, traded a few times previously, flushed it, ramped straight back into it again. So we'll see if that can actually hold just in here. That's a SPY, is it? Yeah. So yeah, if that's going to hold today, you might expect a bit of a short squeeze on the Nikkei, but I just want to watch that open to see whether it's going to hold this level. It could, more than likely, if it's going to rally, it's going to flush first, flush something like this. That's what I'll be looking for. That flush, trap some shorts, because the last few sessions have been weak on the open. Trap some shorts and then ramp up. The good thing is we popped above the MAs here, but we did that previously. We could be doing something like this. We did that recently. Popped above resistance, chopped around, and then lifted, and then failed after that. But even if we lift up to this zone, 27,975, then there's some fat in the upside we can trade. Bitcoin just keeps going. And like talking about that, it's got all the keyboard warriors happy. All the bulls are just laughing, watching that go up. A little pop on the SPY. So Bitcoin, cryptos are edging high, but Bitcoin's ramping up. So Bitcoin's dragging all the others. What do you call them? The altcoins and the other majors, dragging them higher. Ethereum's a little more contained. It's popped up through that 35.50 and it's gone sideways. So that's it for those. Is anyone on anything at the moment? Still getting supported, which is good. SPY. Bloke, you on? So look at that, man. That's a hefty sort of a move down. What's that? Off the high, we've moved down 36 points. So I don't like it. The SPY it can get bullied enough. I was wondering, I've always thought one of these ETFs. Yeah, the ETFs, I don't know if anyone knows much about them, but I know that obviously massive stocks, they're going to sweep the market quite a bit. And the bigger they get, because all your mums and dads are just diving into, they whinge about CFDs. You know, people have a bit of a complaint about CFDs. Oh, you should the margin, all this is bad for retail. What about what about ETFs? I mean, ETFs are someone buying. You get enough people buying into that same ETF. Say the energy, there's an energy one. There could be some rubbish stocks within that ETF that are getting swept up with the momentum of just the ETF sweeping the market, buying into those shares. So I always wondered how much they've got to do with these sort of swings. I mean, this random swings. You've got market has that little green candle there. You would have thought would be fairly positive in any normal day, fairly positive, but they're flushing these highs. We flushed this 72.16 with the on the open, come back, retested. That might have dragged in some more buyers. On this green candle, got a few breakouts. It just took out that high, expecting it to push to 72.74. All of a sudden, it's turned on a dime, went straight back down, and took everyone out. All these stops built up, these buy stops built up in this little, what was it, up until about, not even 10 past 10 once the ASX is open. ASX open, they ramp it lower. So what we'd be looking for here, if this can hold, because this is actually a good flush out. So what that's done, you've got everyone that's sort of watching that above 72.16. It's flushed down. They go, okay, it's all over now. It's ramped back up. If we can consolidate above here and a push through 72.25, we could be taking out this high and start to build a bit of a momentum to the upside. That's all off the 1 minute chart. The 5 minute chart is looking, it could be a lower high in here. So we just have to wait and see. The trend is definitely up at the moment. It's just into a level. It's whether this level is going to hold, we're going to move up to the next one, or whether it's going to fail. Sorry, that level is going to hold and we're going to fail. Yeah. I don't know if anyone looks at, is it Burry, what's his name? Michael Burry is talking about the next big problem is going to be with ETFs. And it's because, you got value investors, and it's fine if you're a stock trader only because all they ever want is things to go up. And, buying into an ETF, they tend to reward crappy companies too easily. Not really crappy companies, but if they make up the ETF and there's some rubbish stocks in there that shouldn't be on the valuation, shouldn't be this high, they're getting swept up with the ETFs. And vice versa, you might get some that are not that should be performing well that are getting pressured by the ETF as well. So I don't think the individual share prices can be as fair because of all the massive rise in ETFs, and everyone's pumping those at the moment. You get a lot of what do you call them, educators talking up ETFs. It's nice and easy. You just buy that, chuck it in your portfolio, and you forget about it. Not necessarily. Yeah, the landscape changes a lot. You always got new products being thrown at you. Still like the indices though, trading indexes, even though there's a couple of bad days every now and then. Where's the Dow? Let's get to a 5 minute view. So it'd be interesting to see now if that's going to, now that we've flushed that high. Now, as a side note, I don't put too much emphasis in the Dow during the Asian session just at the moment because they're filled with it. The futures itself have been fiddled with, and I'm wondering what out of ours, so the Hang Seng and the Nikkei, what they use to hedge. So the Hang Seng is not open, it's moving, and the Nikkei's it's going to open. The CFD is open. What are they using to hedge? Probably the futures. on the Dow. So when things proverbially hits a fan, yeah, the Dow is going to move the market. We saw it in the pandemic. The Dow goes down, we all go down, and vice versa. That starts to ramp up. But at the moment, even though the Dow's coming off, I think it's more in reaction to what's happening in Asia and Asian markets trading it rather than US related. So I put more emphasis on the Hang Seng and the Nikkei mainly. And that's even decoupled with our market. Lately, it's been we're down, they're up, they're down, we're up. It's just a bit, everything's a bit of an argy-bargy at the moment. It's certainly, the Hang Seng's come off a bit, the Nikkei's just dropped, and that sort of started coming off about 10 past 10. It was a Dow. Yeah, well, it's tough, isn't it? Yeah, we were talking about that, bloke. I honestly I think politics is just not a mugs game. I think it's getting worse. Obviously, we know there's some dodginess happening in the US with all these guys that have been trading the mini and that. I can't remember who they are in the Feds, but politics is politics. Everyone knows. I mean, they're going to raise the debt limit. So why is it? It's just pumped out in the news because it's funny. Um, Not funny, but something for someone to talk about. Uh, so just looking at something else now. Yeah, so it's been politics, isn't it? We all know they're going to raise the ceiling though, because God, imagine if they didn't. I mean, absolute catastrophe. US defaulting on some debt. I've got to read more about it because it just doesn't make sense. They can keep raising, raising, raising. How do they actually fund it? The debt's higher than the actual income, isn't it? The GDP. So at the moment, it's just indecisive around this level. Problem for me, momentum's it's sort of had a good run up here. There's a chance all these longs in here could be squeezed and a pullback. Yeah, I know the US could just keep printing, and they sort of, to me, it's just like a bit of a monopoly money. Um, it's not real. They can, yeah. So when they can print using debt to fund themselves, just doesn't make any sense. No other country can do that. Well, anyone that I guess prints their own money could. But yeah, they're definitely not going to default. I just don't know what's going to happen in the future. I think my kids are screwed. You can't buy a house. The US is going to default. The next is if there's going to be a superpower change. God forbid, we've got China probably coming up the ranks. I was reading a funny article about the missing persons in China. Might be a dodgy topic to talk about, but it's probably US propaganda. It was on Bloomberg or Reuters. I can't remember. But yeah, anyone that speaks out against them, it could be something small, something big. That you're going missing. Look at Jack Ma. I mean, how could a billionaire go missing? Everyone knows who he is. He's gone missing. Then he come out later and said, "Oh no, I'm just on a bit of a holiday camp. I'm getting reprogrammed by the CCP." And then he's out again. They can't find him. I mean, surely it's just all so dodgy. Apparently, 30,000 go missing a year. It's incredible. So if that's the next superpower, is that what we've got to look forward to? Oh, didn't turn off my stopwatch. Just backwashed my pool and forgot to turn my stopwatch off. Anyone around Bendigo that knows anything about coping around a pool and laying tiles, come and help me. Yeah. Has he gone missing, has he? Oh, it can't be right, can it? In Victoria? Yeah, they've got a lot of influence. I think the Chinese, the tentacle we don't know about. A lot of the tentacles are everywhere. I should shut up. I'll go missing. I'll be in with the kangas across the road in the park. He stood down, was he? Yeah, you don't mess with real estate and the Chinese buyers. Uh, Politics. Good old lefties. You don't say too much, you make them angry. Yeah, yeah, true. If they do call in the debt, US is screwed, but the Chinese will be screwed. The whole markets will be screwed, which is not going to help them. What happens then? US dollar slumps, gets slammed, and uh, commodities boom. China needs commodities. Well, wants them. I don't think they've got energy. They're already screwed with energy, so it's probably the worse off for China than it would be, wouldn't it? Anything dollar denominated would probably get crucified. It's all a mess. I think it's a massive political problem because I mean, believe it. I mean, I don't think politicians have got. And I might sound a very not alarmist, but negative. I don't think they've got the economy at heart generally. By the time that hit the top ranks, all they're concerned about is their elections and their the numbers, the votes, and things. And even the government's only ever in for a few years, and they can get booted out. So they're always trying to make voters happy. Not so much what's sometimes what makes the voters happy is not good for the economy, but they create these big issues because the governments are not in for long enough. I guess it changes, chops and changes too quick. I mean, it's 4 years in the US. What is it? And we could be a few years here. And then within the parties, it's been lately, well, more recently, has been a lot of changes. I don't know a lot about politics, but it just seems like to get anything sorted, implemented, if it's one party's in, they do something that could get changed by the next party pretty quickly. We saw it in the US. Anything that Trump did, not whether he's good or bad, just gets reversed anyway. So, and then what if he gets back in? What if Republicans get in next? They're going to reverse everything that the Democrats did. Not everything, but a lot. So it's just like nothing can get set in stone. And we've seen debt levels build. Our housing market's going nuts. I just don't see how it could keep going. And what's going to happen when we have to start raising rates if inflation really kicks off? There's probably a lot more to it than that. But all right, how long have we been going now? 39 minutes. That's not so bad. The spy's just flushing. Yeah. So what are they just raising the what do you I don't know what you call the interest rate. So when you go for loans, you have to be able to pay off high interest rates now. They so a while ago they had them high, then they dropped them, they cut them, didn't they? So the government keeps cutting them to try to stimulate the housing market, and then and they say, oh, it's good for the first home loan buyers. Nothing at this stage is going to be good for home loan buyers, and it hasn't been for years. They're the ones that are copying it the hardest. All that's good is for property owners. Every time the government talks up that, there's no way to, you know, every time you give a grant or anything, it just goes into the tradies' pockets because the cost of, building goes up. And it would. I mean, if you've got a backlog of places you're going to buy, you're going to put your prices up, aren't you? Because demand's there. So anytime, there's a government a grant, let's say an extra 20 grand for first home loan buyers, you can expect the cost of the build to go up 20 grand. Yeah, so I think that's probably the better way to do it. Like if you can't, as prices are going up, if you can't afford to cover a higher interest rate, you probably shouldn't be buying because rates, everything's cyclical. It's not going to stay down here for long, forever. Yeah, but still, it's kind of criteria. The banks will tick it off. Whether they care or not, it's a different story. Banks only care about getting more loans. They've probably got banks will be knowing that there's going to be sooner or later, they'll probably, whether it's a crash or not, but there's going to be people under pressure. It's like, when you buy the top in a market, you're buying to resistance or you're selling to, not so much selling to support, buying into resistance. You're probably the late comer to the party. You're just hoping that there's someone else that's going to keep pushing it higher now with the housing market. Uh, every time I think about it, my thoughts change. If you're buying at the high and then interest rates do go up, you know that people are going to leverage to the hilt because they have to get into the property market, especially the younger people, the younger generation, and where their deposits coming from. You can't just save up 100 grand easy. What's 100 grand? It's only 10% of a mil. If you want 20%, forget about it. You can't buy much for 500 grand if you've got that deposit. So deposits could be coming from your parents, just to get them stepping into the market. So I think they're leveraged, and people that are leveraged too much are going to get hurt. So doing that, yeah, it's gonna take some heat out of the market, out of the action. But if we do get some rate rises, there's going to be a whole bunch of people who are going to be hurting fairly quickly. The good thing is you're only raising rates in a good economy, so I think not losing jobs is not a problem as such. I think there could have been a problem if there's a massive crash and we start seeing layoffs and stuff, and the unemployment rate sort of tick higher, and then the housing market you would think it was paused, but thanks to the government of the pandemic, everyone got money anyway. So that's all interesting stuff. It's just a big roundabout at the moment, big merry-go-round. Mm, yeah, because so we just flushed that level here. You can see that we've just it's not a bad sign for bulls, but I think the spy can do that quite easily, can't it? You've got this high, whoops, this high in here, flushed up through, fell over, tried to go again, tried to get up here. So you've got buyers, anyone that's, you've got bulls and bears. The market's always trying to fight for equilibrium or fight for dominance, I guess you'd call it. If you can't get up through this time, flush down, clean out some buyers, reset, try to go again. We tried to go again, couldn't, had to come back down, but we've got, maybe there's a line of stand for buyers just here, sitting on 98. We'll soon see. You don't really want to see it capped too much. Yeah, so that's the flush. If we can get back up through this zone, 06, then it's going to stop a grind. If we start to break below that level, it could just be a grind lower most of the day, like it has been the last few days. ASX pops up and grinds lower. Yeah, good old stagflation. I like that name. And that's the problem at the moment, isn't it? That's what the Fed, I think the US Fed's looking at. Is the inflation here to stay? And they've said no, it's transitory quite a lot in the past. Problem is it's stayed. It's stuck around for longer than they expected. And they're admitting that, but supply chain issues can be solved. I don't know why there's such supply chain issues for so long. Probably China just trying to piss everyone off. Pardon the language. Dow's popping here. Hang Seng's open now, isn't it? Yep. Yeah, Bitcoin. Bulls are still out there. What's the Aussie doing? Holding his MAs trickling higher. It's a bit of a mixed bag at the moment. Is a yo-yo. Just going to delete that. We'll start again later. So we're holding below this level at the moment. So a good leg up here, a bit of contraction here. Back to the MAs, another good leg up. Fading now, so we're fading quite a bit of this leg up. Whether we start to rally or this is the start of a new leg down, it'd be interesting. We get down to there, which is what, 70, 69.80. It's a little bit of a basket case. So we're below the 200, which is not the world's best sign on the daily. So we could be just sort of fluffing up and roll over. I think that's going to lead into it's more linked to what the US dollar is doing. It's a dollar index. That dollar index is it's 94.60 zone. Yeah, around about there that I've been watching for a bit. Trend is high. You've got this kind of this move down, lower high. Okay, still in play. Retest fail. Tested there. It's come back up. At here, it's either going to fail. Now, if you were bearish, you don't want to see that level break. In red, 93.40. It's come down, retested, held, and lifted. So it's whether that sort of a leg up there is going to take us up, which could just sort of looking left to see what it could go to. 95.84. Massive range in it. So that makes sense when you pan out to this range. US dollar could head all the way up here, which is going to hurt the Aussie and other currencies. Gold's a bit of a basket case too. Let's get rid of that. I keep my levels on here, but sometimes you get so fixated on them, you've got to reset it. Yeah, gold's manipulated. God, the algos rip it. Well, yeah, exactly. Second trade. I was at the SPY. Yeah, I don't think anyone. I've always thought, why anyway? Why does it? It's such a hedge against inflation now. Everyone's talking up inflation. It's going down. Where's the hedge in that? Um, you've got gold bulls, and it's backed. They talk about okay, you need gold to back was it fiat money or whatever. But does it over time? All they keep doing is lifting the borrowing capacity against reserves or whatever. So it doesn't really matter. Yeah, it is. It's an old man's Bitcoin. Exactly. So I think that's changing it, and I think there's always going to be gold bulls around. I mean, that looks on the daily. That doesn't look so bad, does it? This lift, consolidate. I mean, as long as this level holds, we could get another run up. And that's kind of the squeeze lower that we've got our eye on. Or it could do this, the same sort of thing. Or we're looking cup and handle here and then fail, and that was the same sort of thing. You had resistance there, support there, and then boom. Once you got to about here, you're a bit of a problem. You're going to be on the short side. There's no reason why we can't do that just straight through this level at 1680. And you look at this intraday crap that we're looking at last night. Look at this. Tell me algos don't run that market. Flush here, ramp, and then we flushed this low, ramp, took out the high, come in, took out the low, took out this little high. It's just taking out levels, left, right, and center. Good luck, mate. I'll probably jump off soon anyway. It'll just be me and Jace talking. I'm just sort of doing a bit of a recording for the new channel, YouTube channel, seeing if it was working. I talk rubbish anyway, mate. It's not a pretty market at the moment. It's grind. It's just, I think there's some longer term. I don't know. Trying to think. But you're probably like me, that's why. Just like having a chat. I'll show you the trades from I was looking at yesterday on the Hang Seng. So I don't really do lately. I haven't been trading a hell of a lot. Ah, yeah. So all I'm trying to do, and it'd be good to get your opinion too, mate. So with no, yeah, in the grander side of it, I've got tons of ideas, mate. So I've just put this together myself. This is just the website, tradethestructure.com. The only reason I was using that is because I got a Facebook channel I was posting rubbish on. I called it that. I thought, oh, let's just use it. So once trade setup stopped, because of licensing and stuff, it makes it a bit tougher. Um, I just wanted to keep it going, and as in, try to build the community. Is what I want to say. Without marketing, it's hard to build. So I figure, look, let's put that together and see if we can all spread the word a bit. And for me personally, it makes it worthwhile because I can help grow through this, help grow the Trade Direct. We've got that platform as well that we work on and trying to build that, because that's a good little business going well. And it's a good platform. I know it does lack in some areas, but yeah, I've got Facebook as well. So at the moment, this is just a website, traderstructure.com. I've got it linked into a Twitter, which I've just taken over Trade Setup. Just changed that there. So it's getting posted in the Twitter as Trade the Setup. And we've got Facebook, and I post under me on LinkedIn. So anyone that's got some good marketing ideas, I'll be looking at, I guess, Facebook ads and things, but that's kind of like you have to do it as opposed to you just to be stay in the game as opposed to work. Most traction, I'll have to be doing talks. So we've got a meetup community which it's sort of built up, and then we hadn't done much in it because it was all sort of trade setup based, and you just get sidetracked. So to be doing talks, I've got to speak to people to start promoting it, um, promoting this site. So what I've got is I put together. Should get your opinion on that too, Jace. We've got the 5 minute trading strategy. So the idea is to hook them in, especially new people, because I think new traders, there's going to be some people that are, getting into it and getting sent in the wrong direction. There's so much rubbish out there online, and I mean some really good stuff, but sometimes it's hard. The rubbish gets better traction for whatever reason because it's all hooks, bait, all that sort of stuff saying, "Oh, you buy this and you'll be rich." I mean, we all know anyone that's traded for a while, knows it's not an easy game, and there's no get rich quick type of thing unless it's luck. You're on the right side, you happen to jump into Bitcoin not knowing what it was going to do, and you forgot about it. Because if you're watching it go up, more often than not, people just take it off because they go, "Oh, look, Bitcoin's gone to $2 to 10. I'm rich now. It's 50,000." That sort of thing. So trading is not easy, and I think you've got to learn the right way. I'm just going to see if he wants to jump on and see his opinion too. Yeah, yeah. See, Jace, that's what we're talking about. So we're talking about with Davin, and it was kind of like it was based around what do you call it, Europe. So we're going to look at doing a trading competition through Spotty, not Spotty. I always forget their name. Spotty is the segment that I do with a guy called Elio, and he's taken it over now. He's doing his own segment, and the other one is Ticker News. So Ticker News had Spotty segment. So they have different segments, and they all run by different people, obviously. And that faded because their news just changed direction, so that didn't work out. But with Spotty, he's up and running his own platform, exactly the same thing, but pushing it himself. So it would be good to do. We could do a trading competition, but then you got to sort of in the Australian session, it's kind of tougher because there's not as many people around and viewers and stuff. Whereas the US and Europe are a lot bigger. There's just more people, more traders. So it's kind of that could be a good option. Just playing around, even if it's just trading, everyone can jump on a demo and have a bit of a play. So there's no stress about it, but you can do your style. You can, and especially the hang seng, because without without I guess a plan of attack, it could rip you around. So if you could get lucky, but generally you don't get lucky. Whereas a spy, you can just buy it and it ramps up, or it could drop if you sell it, type of thing. So it could be more luck than anything else. Same with the Nikkei, I guess, to some extent, but the hang seng sometimes, if you're on the wrong side, you'll know about it pretty quickly. So yeah, you could do a trading competition and just get out there for a bit of a promotion. I'll have to do some talks online, more and just more, trying to get out that way and pushing it. And then I guess you've got your SEO of the website, which I don't know a lot about, but I'll have to learn that. You can do a lot of videos on YouTube, which you can add SEO to as a program. Like I said, I'm not a massive, I don't know exactly how it works. I think a lot of the time it's more topical. If you happen to be topical, the latest topics, I don't know, whatever it is at the moment. So it's energy crisis, and you start pumping out videos on energy crisis, and you do the SEO right, they get more views, and it brings in more people to the site. Um, yeah, yeah. There's a lot of day traders. I think share day trading seems to be pretty big. I've always got an indices, and I've always known people that traded indices. Um, Never really thought about trading intraday on shares, but there's a bit of a community there too, isn't there? And I know on the platform indices are traded quite a bit, and I think it's It's a harder gig though. I mean, intraday trading shares could be, I think, easier if you've got massive volume. You can do some big volume, and you've got to get your CFDs cheap though. Cheap brokers. So that could kill people. Whereas indices and stuff is getting a bit cheaper. I mean, with the Hang Seng, there's movement. You don't have to worry about 5 points on the Hang Seng. The SPY, well, we got it set at 1 point something or a point. Um, Even the Nikkei, you can have a 40-point stop loss. You can get tagged on that, but it can move like this, can actually move quite hard, like the Hang Seng, can't it? Yeah. So there's some ideas. So the whole theory is that's the homepage. I've just got bits and pieces on there, so I'll tart that up a bit. Any ideas? So whip through the page if you want, have a bit of a look. Yeah. So the thing is that you can get on the chat groups. I can start pushing it into chat groups too, as the website. Not so much this chat group, but I think you can get on there and promote it a bit. I'm not sure how you do it. People more savvy than me, and just say, hey, anyone wants to join this group or take a look at the site for trading information, for example. Potentially you could do that. Any other ideas would be great, mate. So that's the homepage. Then just about, I'll just set up, that's my opinions here. Why do 90% of people fail if I prepare both the market and mindset, complaining, trading, unrealistic expectations? It's my views, a bit about me, my nice little mug on there. So I like all these pictures. I like the funny stuff. I've got your testimonial there, mate. um, I also got, so that's just a blog. That's what you're seeing coming through. So this is another thing. I'm not sure whether I might put some paid content, so, I mean, the idea is if you register for that, if you log in, you register for that, I'll send you out a PDF if you start an account with Trade Direct, and you can get into the members area for free. Um, if you've already got an account, you're not interested in Trade Direct, then there might be some paid content, like a minor charge to get into the members area, which will just be, these kind of talks will be in there. Live trading will be in there. Video material, educational stuff that I want to put together. I've got to redo some that we've already put together and do some new stuff. That'll be in there. Um, Bits and pieces. So we'll have, say, in the chat room, I want to have, what do you call it? Member content and just random talks. So the member content would be under this members area. So whether it just has like I think Jan was saying, Patreon, hooking that up, which I'm trying to look into at the moment, hooking that up, sort of subscribe per month, pay per month, and then you're in the members area and you can get access to. I think the morning report morning jumpstart will be for everyone, and then somehow with the levels that we send out, um, levels sending out just paid content, on the blog. So this one here, trading plan, you see it on the blog, but when you get in, you can't see the levels. Like it only gives you a few lines before you get to be a subscriber. So I want to put that in the members area as well. That members resource is just telling you, hopefully, what you'll get, what you can expect. This is that 5-minute trading strategy that I'll talk about. Contact page, register page, which I've got it. I'm actually logged in, so register page is up, I think. Might be up, I'm not sure. And then obviously jumping into that members area. So yeah, that's it, mate. Still got some words there. Yeah, that's true. We get the Lambo picking. I don't have a Lambo, that's it. I've got a Jeep. Does that count? I've got a Jeep. I'll let that out. There we go. So that's a good little crack. I mean, if we can hold this and ramp up. 1108. All right, might have to do a dash. Dow's just chopping around here. Hang Seng. I'll worry about that until it opens. 6 close. That's just chopping around. That's just CFD prices, so they're probably more following the Dow movement than anything else. Bitcoin. Should we get on these Telegram groups too? Right, mate, I might just shoot off. I've got to see what the boy's doing. So my wife's teaching at the moment. Better make sure he's actually trying to do some work. So I'll head off. Yeah, and hopefully I'll try and give you a call still, mate. Anyway, all the best. Thanks for joining in, mate, and we'll see you good. See you soon. See you good. See you soon. Yeah, legend, mate. Thank you. Cheers, guys. Bye.